Hello, this is Martin here. I've got another weekly broadcast for the trading opportunities that I am looking for, and we're talking about the week of March the 7th to the 11th. Hey, we've had a really mild winter, and all of a sudden last week we were hit with some really cold and crazy wintry conditions, and now it seems like winter is never going to end. So I don't know what's going on, but March is one of those weird months, and I'm looking forward to some Caribbean sunshine. How about you guys? Anyways, let's get on the rocket ship toward the planet Forex. Let's take a look at what we're going to do. And this week, I'm going to do something a little bit differently. For one thing, the charts are going to look just a tiny bit different, and it's going to indicate for you my trend bias, whether I'm looking for buy or sell trades. It should make it, but looking at my charts, especially the daily charts, it should be a little bit easier for you to see what I'm looking for and what I'm hoping for. And the other thing that I'm going to do is we're going to look at the monthly, weekly charts for further clues. So what we're going to do, what is commonly known in the industry as top-down analysis. Now, what that means is that we look at the higher time frame charts first, such as the monthly and the weekly, to gather our clues to see which way trend is likely headed, whether it's going up or down or even just going sideways. And based on the larger time frames, then we can drill down to the lower time frames, such as the daily and the 4-hour charts, to give us a better idea for entries, so more precise entries, exits, and profit targets and stop loss levels. So that's what we're doing. This is brand new for you guys. Like I said, I want to change it up and see if I can give you even better content. So we're going to start with looking at some price charts I put together that are pretty plain and ordinary with not much on there, just pure price charts. And we're going to look at them on a month. We're going to start with the monthly charts, and the very first one is the Euro USD. Okay, you can see the Euro USD now. This is the monthly chart, and let's see if there are any clues that we can gather. Well, first of all, we can see prices come down quite a bit on a monthly. And when I say monthly, we're talking each of these price bars is 1 month's worth of price movement. So yeah, if you're trading monthly, or weekly, you've got to have a lot of patience because a lot of time will have to pass by before you can decide what to do next. However, looking at the monthly and weekly will give you an overall idea as to what's happening with trend direction, whether prices just going sideways. In this case, you can see basically prices going sideways. However, with this pin bar and this basically almost an engulfing bullish candle, we see we have a little bit of room to the upside. Now, on a monthly chart, doesn't look like much, but there is quite a bit of room. I'm going to switch to a weekly, and on a weekly, you can see if price gets above this area right here, we could still move up by about 260, 270 pips, perhaps even more, perhaps even up to this area right here, which would give you quite a number of pips. We're talking 800 pips or more, okay? So basically, I see a bit of an upside on a technical basis. The euro right now is weak. I mean, there's lots of problems in Europe, and the economic forecasts look quite dire for the upcoming year. And I believe the euro will come down, but perhaps right now on a technical basis, there's still some upside potential to this. And I'm now going to switch to the regular chart. Okay, here's the regular chart. You can see the Euro USD, and for last week, when we were looking at, here's the start of the trading day last week with this red vertical line. I said sell on a pullback. It did on the Sunday, Monday open right here. You can see price did come up quite a bit and then come right back down. So if anyone got in right there, you would have made some pips. Or I said just wait. And in this case, you would have waited, and all of a sudden you see right here on this daily chart, we have two dojis, which means indecision, or another way of looking at the buyers and sellers are duking it out for supremacy. And with this bullish candle right here, with this bullish engulfing candle, the buyers certainly won the battle. Getting in right there at the open of the next one would have made you quite some pips. So for this week, I see upside potential right here, and there's two ways of looking at it. If you on a whether you're conservative or aggressive, you can get in right here on the breakout. On the breakout above this gray rectangle, just put a buy stop order there, and price should go up higher to at least this area before bouncing back down, or waiting for a pullback, because we ended up on Friday with a bullish candle, waiting for a pullback, getting in right about there. Your stop loss would be pretty tight, just around there, and looking for an opportunity, a counter trend up. So that's what I see for this week. I believe technically price is going to head a little bit higher first before coming back down. Okay. The other thing, of course, is just waiting for evidence to the downside, getting in around here and taking a sell trade. Okay, the MACD is below zero, but again, there's a caution there. Okay, so that's what I see with the Euro USD. Now we're switching to the British Pound USD. On the monthly chart, again, like I said, we're going to look at the monthly and do some top-down analysis. You see, we have kind of a rail. When you see a black bar down and a white bar up, which is almost equal in size, that's called a railway tie or railway candlestick, because they almost mirror each other, down, up, almost an equal length. And this is a great indication of a possible reversal. Okay, so that's what the monthly shows. On the weekly, if we switch that, um, let me just do something for a second. We've got a gap right in here. You can see that on this particular week, price closed here, and then the following week it opened way down below. So price, I think, has the further upside potential to get to at least to close the gap right there. Okay, and even go higher than that once it closes the gap, at least up to this area right here. So I am now going to switch to the regular chart. Okay, so based on what I saw on the monthly chart, I see upside potential this week. I believe price is going to go higher. See, price is already closed above the 21 moving average, so I believe price is going to go from here up to here, and then watch out. This would be the first profit target area. Price may then come down from there. So this week, counter trend up, or you can just wait for something to happen, bounce back to the downside. We are in a downtrend, so you can just wait for selling evidence to the downside. Last week I said we were in a downtrend continuation. You can see that right here. It actually went down just a wee bit, but it really reversed all the way back up with huge momentum. And I believe last week there's a lot of panic selling here because of the news that came out of Britain, that Britain was possibly opting out of the European Union. And there's a referendum coming up. I believe it's in June. So I believe this is all regards to the panic selling. But now cooler heads have prevailed, and price is coming back up here again before possibly coming back down. Okay, so that's what I see on the British Pound USD Daily. Okay, here we've got another major currency pair, the Australian USD dollar. Oh, by the way, on all these monthly charts, I've just put KISS, which stands for Keep It Simple Stupid, because as you see, there's hardly anything on the chart. I do have my 21, I've got my 50, this blue dash line is the 100 simple moving average, and the red dash line is the 200 simple moving average. So based on the monthly, you can see we have here a huge momentum up candle, bullish candle. The buyers are certainly gaining control. Um, the sellers tried to take price all the way down, rejected down here from going further down by the buyers. Buyers pushed it up. Sellers brought it down just a wee bit. The buyers came back in strength and pushed it right back up. And on Friday was a huge momentum up candle. So we've got a great potential to the upside to at least this area at first, and then to at least to meet up with the 200 moving average the and the 21 EMA, as well as this area of confluence, which is this red or magenta triangle. Not a triangle, the rectangle. Okay, so I believe the momentum to the downside is now shifted upwards. And that's what I see on the monthly. On the weekly, though, we see something very interesting. We have here an engulfing uh, at the support area. Okay, so this would be support. Prices come down, up, down, up. It won't go down further. This is definitely support. So we have one great bullish engulfing candle, and then we have a huge bullish engulfing candle on the weekly chart, taking us and closing above the 50 moving average. So basically, I see momentum to the upside. You can see here with the MACD that the MACD has been weakening. The downtrend has been weakening for quite some time, and now we're ready to push up to at least this area, and then possibly up to here to meet up with the 100 moving average. So this is what I see. So if this is what I see on the longer charts, that we're in an uptrend, then let's switch to the daily chart. Okay, you can see the Australian USD Daily. This is my regular chart here, and we have now gone above a resistance area in this gray rectangle. Okay, we are also above the 200 moving average on the daily. So I see price going all the way up to here to this next area, and we're looking at somewhere around the 75, 50. 75, 80 area. Okay, that would be the first profit target. Now, let me explain how these work again. The bias is to the upside. That's what's represented with this green line. So green means up. If you see a red line on the chart, it means bias is to the downside. So here we have with the Australian strength tied into the recent rally in gold. See, the Australian economy is correlated to the gold index, whereas the Canadian economy is correlated to the strength or weakness of the oil sector. So, in this case, Australia has been one of the strongest currencies of last week, and you can see it just has gone up with three huge bullish momentum candles, breaking above this resistance area. Now, what you want to do, and this is what I'm going to explain with this green line. Okay, there's two choices. Depending on the type of trader you are, if you are kind of a conservative trader, then you may want to take a break above this candle, at least 5 to 10 pips above the candle, and you would take a buy stop order. Okay, buy stop, and your first profit target would be there. Right under here would be your stop loss. Now, if you are a more of an aggressive trader, what you want to do is wait for price to come back down. Well, again, it can be aggressive or conservative, depending on which way you look at it. But if you wait for price to come down further, okay, after this huge up candle and taking an entry right here, then you see your stop loss would be less. You would have you'd only have a small stop loss, let's say of about 70 pips, and taking a first profit target of around 150 pips. You see, that's a 1 to 2 risk to reward, right? One risk, 70 pips to 140, 150 pips for 2 reward. Do you see that? 1 to 2. So, um, so again, depends on what type of a trader you are and what type of mindset. That's why I've got this green line to about halfway here. So you can decide, wait for a pullback, and then take a buy limit order here, or wait for a breakout but I believe overall this week we're in an uptrend continuation. Okay, now we've got the next pair, which is the New Zealand USD. Okay, you can see with the New Zealand USD, same thing, kind of. Um, Price was going down quite a bit. Okay, because the New Zealand economy lately hasn't been that good, or the numbers coming out of New Zealand hasn't been that good. But um, recently, the stock markets in New Zealand have rebounded, bringing price a little bit higher, and people are looking at where to put their money, and one of the places is the New Zealand dollar, and I believe that's going to go continue going much higher to at least this area right here to meet up here, which is from here at least again on the monthly chart doesn't look like a lot, but here it's 299 pips, 300 pips. So that's pretty darn good. Of course, if it closes past here, it'll even go up to the next moving average, which is the 100 SMA. Okay, so again, you can see rejection by the buyers down here. Price did come down, rejected by the buyers. Buyers pushed price up, came down a bit. Price is pushed back up by the buyers, down a bit. And again, last two candles, remember, these are monthly candles. So in both months, the buyers have won the battle, and it looks like they're going to be pushing price back higher. Let's see if the weekly chart shows anything. Well, you can see here we have one huge weekly engulfing candle. And again, if you're a little bit, depending on the type of trader, you can always place a buy stop order just above there, right about there. And we'll have a closer look at the daily chart in just a second, okay? But you can see prices generally be going higher on this pair, okay? Okay, based on the monthly chart and the weekly chart for the New Zealand USD, here you can see the daily, and I expect price to continue going higher. So this week we are in an uptrend continuation. Again, you can see after a long, lengthy push toward the resistance, this is resistance in the gray area. Okay, price hit resistance once, twice, three times, four times, finally broke through, and also here was a triangle, so you can see price being squeezed in tighter and tighter and tighter, and just like a spring coil, when you push a spring in so tight and hold it there for a while, after some time, it's just going to shoot out, and in this case, you can see it rocketed up higher. So New Zealand showing a lot of strength over the last week. On the daily chart, I see price going higher up to this first resistance area, this first profit target area. Again, look to your left, right here. Okay, so price should go up to at least there, and once price closes above this area, it could come down a wee bit to retest this formerly resistance, which is now new support. Price will go up, down, retest it, and then then with evidence to the upside, price most likely will come up to this next level right here. So you can see there's a lot of room for pips all the way at least for another 250 pips on the upside. Now, again, just to explain, this green line means that you can wait from this area right here, from this level, wait for price to come back and hit your buy limit order, and then your stop loss would be just below the candle. Okay, so that would give you a very tight stop loss. Or just wait for a breakout above here, and your first profit target would be there. Okay. Now, last week I said we're going sideways, and pretty well we did, except for on the last day. So up until Thursday last week, we were going sideways. On the last day, we completely broke out, giving us indication that the buyers were coming in strength, and so it looks like we're going to be heading higher. Okay. Next, next pair, we've got the USCAD. Okay, everyone, let's take a look at the USCAD. And on this chart, you can see prices really hit hit a high. You see with this candle right here, this is a huge pin bar. So basically buyers took from here, buyers took price all the way up, rejected at this area right here by the sellers. Sellers took the price all the way back down to here. So even though it was a small bullish candle, really with this long pin bar, you can say that the sellers won the battle on this particular month, because remember, these are monthly candles. This is the monthly chart of the US CAD. The next month you can see here, and I've got the outlined in this little pink triangle. This is a large bearish engulfing candle. And of course, what does that mean? Well, when you see a bearish engulfing candle with a pin bar beside it, then you can expect more room to the downside. It actually went down already in the last month by about 220 pips. So we've got lots of room to the downside to at least this area with this magenta rectangle. And you can see the 21 moving average is going to be meeting that. So as price is coming down, this is going to be going sideways here. So I expect price to be coming down on this. Let's have a quick look at the weekly. Weekly, you can see the same thing. We've now broken the 21, and we've got room. We've got room for this currency pair to come down to at least this area, most likely to around there. Okay, so lots of room to the downside. That's what I see on this. Okay, here's the USCAD, everyone. And again, as I mentioned, based on the monthly and the weekly, we've got room to the downside. So again, now this is the first time, first chart I'm showing you downward momentum. We are in a bearish trend. And again, the beginning of this red line indicates that you can wait for a pullback to the upside before taking a sell trade. Now, the other thing is, bear in mind, see this red dash line? That's a 200 simple moving average. That's a very powerful support area, okay? And price normally stops and then reverses anyway. So if you want to do, just wait for a pullback and then wait for either bearish evidence to the downside or take a sell order below this candle, 10, 15 pips below there, and you expect the price to come down to, first of all, to this area, and then down to this area. Okay, so this uptrend line actually indicates it's a long-term trend line, but this is the next support area with this gray rectangle. So this week, again, as I mentioned, I'm expecting downtrend continuation. It's up to you how you want to play it. You can wait for a pullback and then sell opportunity, or a breakout on here as well. Now, last week, this was a great pair because I did mention take a sell trade. Here's the with this red line, this is the Friday close of the previous week. The first candle right here is the Sunday, Monday. And again, it's not giving you this little white bullish candle. It didn't give you much of a clue, except it's kind of a doji, a kind of a, there's a war going on between the bulls and the bears. Nobody's winning. The previous and Friday, nobody was winning. So basically, 2 days in a row where price was just going sideways with no real clear winner. However, on the Tuesday trading right here with this, here was a huge bearish engulfing candle. Guess what? You know what that means. Once you see the bearish engulfing candle in a downtrend, then you want to take a trade at the open of the next candle right there, and you would have made, like I said, you know, close to 130 pips, as I indicated right there. Okay, so that's what I see with the US CAD. Let's move on to the next pair. Okay, everyone, this is the US Swiss franc monthly chart, and you can see with this red resistance area, this is a major key turning point. I'm going to um, uh, yeah, if you look at the left side right here, you see price came down, price went up, price kind of stalled there, then went down, broke down. Price touched here, touched here, touched here several times, and now again it's bouncing around this major key turning support zone right here. Um, And you notice that with this candle, we had kind of a railway candle again, almost an well, it's pretty well an engulfing candle. So it almost indicates that price is kind of going to be coming down again and not going higher. And on the weekly, if I switch to a weekly, let's take a look. Again, this is a little bit more clearer. Remember, when this is a weekly, so each candle is 1 week's of price movement. You can see the buyers tried to bring price up, kind of a false breakout over past this resistance area. Price was slammed right back down by the sellers, so sellers came in strength. Slowly, price clawed up again with the buyers, but again, second time in a row, price was slammed down by the sellers. So this is a bearish engulfing candle. This is a bearish engulfing candle. You can see right there, price is now slowly coming back up again, but again, it seems to be stalled here. So I believe we're in a sideways. I would probably not trade this right now, and we're going to switch to the daily chart just to see what's going on. Okay, on the daily chart, you're looking at it a little bit differently. Now you can see the channel that price is in. This currency pair is in just in a sideways situation. There's no clear winner. The buyers are not stronger. The sellers are not stronger. See, price up, price down, price up, price down, price even sideways on Friday. This was the close on Friday. You can see price actually went nowhere. It's just a huge doji with a very large upper wick, large lower wick. So with this one, we just want to wait, just like last week. We want basically I said just wait for some sort of breakout. In this case, again, we're waiting for a breakout either to the upside, this area right here above this candle, or to the downside just below that candle. We're waiting for a breakout, and you could either take a buy stop order here or a sell stop order there. And again, these are the respective target areas. Here's the next resistance area. Here's the next support area. This is a key one. 200 simple moving average, which is always very powerful. And if again, take a look at your left, you see how the 200 simple moving average acts as the support. So if prices come down, it's probably going to stall right around there. Okay, so let's go to the next chart, the USD Japanese yen. Okay, USD Japanese yen, again, the KISS chart, basically with almost no indicators on there, just some moving averages. Okay, what do we see on the monthly chart? Well, we have one huge, isn't this an engulfing candle? Okay, and what happens when you see an engulfing candle after a high? Okay, when I say after a high, price is being brought higher, higher, higher. All of a sudden stalls, sellers come in, bring price down. Buyers want to bring price up. Doesn't quite make the previous high. As you see on the left side, price comes back down again. Price comes up just a wee bit here on this monthly candle, and then boom, right down, and it also closes below the 21 moving average. So I do expect price to go up a little bit higher, but then I believe price to keep coming down at least to this area, the 200 simple moving average. You can see the MACD here. The on the monthly chart, the uptrend is weakening by quite a bit. Switch to the weekly. Let me just do this. Okay, the weekly, you can see prices coming down, and then boom, one huge bearish engulfing candle, another bearish candle. So I believe price is going to go come back up to at least around here. These moving averages will be coming down. This will be coming down a bit. So price may come up a bit more, but then I would be looking most likely for a sell trading opportunity. Okay. Okay, based on the monthly and weekly chart, again, we're just waiting for some confirmation, whether to the upside, to the downside. So I'm basically saying for this week, sideways, wait. You can see price is just going sideways, so we're waiting for a breakout to the upside or past the breakout through the resistance with this gray rectangle, or a breakout to the downside through the support. However, if price ends up going lower and closing like right about there, I would take a sell trade because I think the bias is toward this to the sell side. The MACD is below zero, but my bias is taking a sell trade, maybe having a sell stop order right around there. And if your price is hit, most likely it's going to come down to here, maybe bounce around here, and then continue further down here. These two blue lines represent long-term support. If price breaks here, price most likely is going to come to about here, and that is really long-term support. But price definitely could be there around the 108, 109 area, 108.80, 109 area. Okay, and last week I said the same thing here. We were in a downtrend. Just wait. Okay. Okay, we're now going to get into some cross pairs, and we're almost finished, but we're looking at the Canadian, Japanese yen. This is a monthly chart, and you can see again here we had a huge bullish engulfing candle. There is strength to the upside. You can see price still has room to come to at least the 21 moving average, and if it gets past here, all the way up to here. So it looks like buyers are starting to come in and take control. This is the weekly chart, by the way, not the monthly. This is the weekly chart. I'm now going to switch to the daily chart. Okay, based on the weekly chart, you can see, or you saw that there was room to the upside. In this case, there is quite a bit of room here. Um, Again, depending on where you take the trade, if it's, let's say, a buy limit order on a pullback, it might be good for 188 pips. That's pretty darn good. The 100 moving average is coming down to converge along with the gray rectangle. So I believe price, you see this huge engulfing candle right there? Okay, that was on the Tuesday trading day. So again, I think price is going to go higher, and what you may want to do is just wait for a slight pullback and then take a buy limit order, or you could take a breakout, or whichever way you want to do it. MACD has just gone above the zero, and I believe we're in an uptrend continuation for this one. Okay, next pair. Okay, the EURCAD looks like we're heading down. The euro is certainly weaker than the Canadian dollar. And what do we have here? Two huge pin bars. Now, this is the monthly chart. However, on a monthly, take a look at this. Buyers brought price all the way up, and sellers brought it all the way down. The buyers just barely hung in there. The next candle, however, sellers were not taking any prisoners, and they just brought price all the way back down here. So it looks like price is going to head down lower to at least the 21 moving average. We're also meeting up with the 100. You can see this blue dashed line, okay? On the weekly, you can see the same thing. Okay, you can see huge bearish engulfing candle, another bearish engulfing candle. I mean, two in a row. What other clues do you need? And then right there, another one to close below the 21. So we're headed down a little bit lower. However, it doesn't look like a lot on a weekly, but we're going to switch to the daily to show you how far down it could go. Okay? Okay, everyone, here you can see the EUROCAD, and my trend bias is to the downside as I tried to explain technically on the monthly and weekly. So I believe price can still go from here down to at least this long-term trend line. Once it breaks this area, it may go up a bit, but can come right back down to this area before bouncing up again. So there's a long way to go. From here, we're looking for at least 150 pips. If it breaks the trend line and keeps going down, that's 500 pips. So there's fantastic opportunity, at least risk reward of at least 1 to 3, 1 to 4 on this one. Again, look to your left side. Price did come down, and then from here went up. So here's the previous swing low on the left, but price has to come down to here first. So I believe this week we're in a downtrend continuation. Okay. Okay, here we're looking at the British pound, Japanese yen monthly chart. Monthly chart. I see price kind of right here stuck between the 100 SMA and the 50 SMA. I would wait. I would probably not do much. You can see the MACD is trending down, so the uptrend is weakening a lot. So my bias probably is to the downside, but in this case, I would just wait. We're probably going to be trading sideways for a bit. And let's take a look on the weekly. Weekly, you can see price here. This was an engulfing candle, so it is some room to the upside, but we're meeting up with the 200, and as I mentioned already, the 200 SMA is quite a powerful resistance or support area. And I'm just going to do something for you right here. So if price is going to go higher, it's not going to go much higher than this area right here. Okay, so I would probably not take a sell. I would probably not take a buy trade on this. Okay, so right here, you can see on the daily chart, if price closes above the 21 here, then we've got a little bit of room to the upside. Not that much, but this moving average, the 50 is coming down. So there is some room to the upside. Let's take a look. Well, actually on the daily chart, because this pair is this pair moves a lot every day. We're looking at 350 pips, even if it's down to here, 250 pips. So just be careful with this one, okay? And you may want to trade this on lower time frames, like the 4-hour chart. However, if price comes back, if you see some bearish evidence to the downside, you might want to wait till this area and then take a sell trade to the downside. So for this week, I'm saying we are in a downtrend. Yes, the MACD is below zero, and we have been trending down. You can see that lower high here, lower high here, lower high here, in comparison to the previous swing highs. As you look to your left side, we are in a downtrend, but I would wait. So when I say downtrend, wait, don't do anything, just wait for evidence to the downside, or take a counter trend trade up with a very tight stop loss. Okay? Okay, everyone, this is the Euro Japanese Yen. This is the weekly chart, okay? Weekly chart for the Euro Japanese Yen, and you can see something quite interesting. We have one pin bar and then another pin bar, a bullish pin bar here. Both pin bars indicate that the buyers are coming in strength. Or buyers at least preventing price from going down further. So I'm expecting further price movement to the upside to at least this area with the 200 moving average. This average is 21 is coming down along with the trend line. So I believe price is going to go up higher. Again, on this chart, it doesn't look like much, but possibly can go as high as at least 270, 300 pips. Okay. Okay, you can see the Euro Japanese Yen daily. Even though we're in a downtrend, okay, we're in a downtrend, but I want you to wait because you see price has already started to go higher. So when price goes higher in a downtrend, it's called a counter trend. Okay, so you can take a counter trend trade up if you'd like. I would wait for price to pull back a wee bit on this Friday's candle close. You can see Friday's candle was bullish. It's white, but wait for price to pull back and then possibly take a buy limit order or wait for a breakout above the 21 moving average. But I believe price on this pair is going to go higher to at least over here. Here we have a major resistance area. And then from here, price will probably most likely bounce back to the downside. Okay, so we're in a downtrend. Just wait. And next pair is the Australian Japanese yen. We've only got one more after that. Okay, the Australian Japanese yen, the Australian dollar was fairly strong last month. This is the monthly chart. You can see here we've got a huge bullish up candle. So I see some further movement to the upside to at least here and then possibly here. Okay. Now, generally, okay, you can see here we've got a upper trend line, a lower trend line. So we're within a channel. Price come down, price come up, price come down, up, down. I expect price to come up a little bit higher before coming back down again. Let's quickly go to the weekly, and you see we're stuck right here. Just price is closed below the 21. So again, you have to kind of wait to see if price goes higher, and if it does, it's going to come up to this area right here. So you can see on the Australian Japanese yen, we're in an uptrend continuation on the daily chart. And the reason is because we did break the triangle. You can see the triangle right here. We also broke above the 50 moving average. Price has gone up 4 strong days in a row. The Australian dollar was one of the strongest currencies last week. So I expect price to go up a little bit higher, but caution because we're approaching the 100. If it does get past that, we're going all the way up here to the resistance area. So the best way to play this, if you're thinking that the price is going to continue higher, then wait for price to pull back down to here, this area right here, take a buy limit order with a tight stop loss, and your risk to reward will be much better for you there. You can see the downtrend has weakened totally, and it looks like the buyers are taking control. Okay. Okay, this is the last pair, everyone. I know this is a long video, but I wanted to cover, like I said, a new idea today, a new concept of top-down analysis, looking at the longer trends, giving us clues to the shorter time frames, such as the daily chart. So, last pair, Euro, British pound. I think this is a great opportunity to short this position. I think this is going to give us one of the biggest risk to rewards, and I believe price is going to come all the way down to here, to here, to here. Remember, this is the week. This is just the weekly chart, but we've got a lot of room for movement for price to come at least 150 pips here, 200 pips there, and then 300 pips with the previous swing high here. So this is a pretty large engulfing candle. You can see that right here, indicating that sellers are completely in control, and we're going to switch to the daily chart. Okay, on the daily chart, so again, if you want to wait to see what's going on, you want to just wait um, for the opportunity here. We can either take a buy, a stop order right here to the upside, but I believe the opportunity is much greater to the downside. When you see two red lines, that means my bias is toward the downside. Just wait for a break below there. Okay, and the first target would be here, the second target would be here. So it's great for a counter trend trade, but at some point price may come all the way back down here to meet with the 100 and 200 moving averages once it breaks the previous swing low here. So for now, it's up to you how you want to play this, but I see this as a great opportunity for a great counter trend trade, sell trade to the downside. Again, you might want to just wait and see for further evidence. Okay, everyone, those are my charts. A lot of cross pairs for this week. The video went a little bit longer than I wanted to, and we're going to see at trimming that down again. If you like what you saw on the actual charts, let me know by email or your comments below the video here. But and also, if you have any questions about any other cross pairs or any other pairs that I did not showcase in this week's video, please send me an email and I will analyze that for you as well. So be careful with your trading. Happy trading regardless. Make some pips and we'll talk to you again soon. Bye for now.